Hey everybody, Boris. Welcome to the commodity dollar update for Aussie dollar, dollar CAD, and Kiwi dollar from March 27th to March 31, 2017. The COM dollar land really is again taking sort of secondary stage at this point. It's really going to be trading pretty much off dollar flows. We had a lot of commodity dollar news the week prior. RBNZ came out, pretty much reaffirmed their position. We're actually relatively hawkish on a relative basis. Did not in any way, shape, or form indicate they were going to cut rates anytime soon. They didn't want to see all the commodity central bankers want to see their currency be lower, but it's just basically job money. Interest rate differentials is probably primarily the key thing that they're trading on, and it's trading in a very low volatility environment. The key thing here probably will be the 10-year on the U.S. basis. If the 10-year continues to sort of slide lower, certainly the commodity dollars get a little bit more of a bid. On the other hand, commodity prices, oil, sliding down, all of that is having a very negative impact on COM dollars across the board. And they've been on a relative weakness trade for the last week and a half. Probably will continue to be so. Certainly against, I think to me, against the euro. Unless you see a massive move up in oil above the $50 a barrel level, it's very unlikely the commodity dollars were going to catch a bid here from any angle that you can look at it. There's nothing really much going on in the calendar. In fact, the only thing that's on the calendar as far as importance is going to be Canadian data. We have BOC polos speaking. We have crude oil inventories, but none of it is. It's all really sort of second tier stuff. None of it is, could be a major trigger to the trade. When you look at the levels remain very contained within a 200 pip range for almost all of them. For the Aussie, it's a 77.75 trade. For dollar CAD, it's a 35.32 trade. And for Kiwi, it's maybe 72.69. It's really probably 71.69 if you look at it more closely. If you look at the charts here, you can see how much of a range-based trade it's really has been and continues to be. Here's the Aussie dollar. We talked about the fact that 77.78 was just a very, very clear and obvious sell zone. Having said this, though, a true weakness in the dollar, and this is kind of interesting, if you sort of peel back, yes, we are obviously at the top of the range. But if you look at trade really from the beginning of 2017, you could actually say that we're now in the early stages of a very decent uptrend. And this particular uptrend so far really has not been broken unless the 75 gets taken out to the bottom. So as long as we sort of stay ourselves above 75, the longer we build around these levels, the more likely this whole 78 overhang could really go to the wayside. Technically, the markets are actually telling us that the Aussie dollar certainly looks a lot healthier than the blah economic central bank macro environment seems to suggest. So it's worth paying attention to this. And it's worth paying attention to the fact that as long as we stay above 75, there could be a signal here for a long trade to the upside. And I think it's certainly worth monitoring, and perhaps even a small long is warranted as long as 75 doesn't get broken. It could be a very, very good positioning trade for a bigger breakout all the way up possibly towards 80. This is all really essentially probably a play on a much lower growth, lower interest rate appreciation of the dollar than the market may have initially priced in. Kiwi dollar is similar kind of a story, lower levels. Kiwi dollar holding to 69. That's held up quite well. Kiwi is certainly not nearly as performing not nearly as well technically as the Aussie is. But again, here, if we hold above the 69, what would that create? That would create a higher low and create a possible move all the way up to the range high of 73. So they're both potentials here to the upside here in a stealth mode on a technical basis that are surprising given the relatively blasé economic environment. Whenever we have that, whenever we have the price action signaling us one idea, whereas the economic action is just sort of not giving us any clear clues, it's usually a good sign. It's usually a sign for us to pay attention. And certainly at this point, the very limited amount of risk that this exposes us to could be a potentially interesting trade here. So if nothing else, the charts are starting to say very quietly, but with a pretty serious whisper, that the COM dollars are reconfiguring themselves into a more bullish bias, at least on the Kiwi and the Aussie front. Dollar CAD is its own story because obviously it's trading on oil, and in many ways, you see relative weakness here. I think dollar CAD to the Aussie certainly. We talked about the idea here that this, you had this big volatility candle that signaled perhaps more downside action in dollar CAD, but this downside action pretty much exhausted itself for about a 50-point move, and that was it. We'll have to see how much more there is potential up, to the downside for the loonie. The loonie still looks to be relatively distributive. What I mean by that is, I'm sorry, not the loonie looks to be relatively distributive. The loonie looks to be actually, the dollar looks relatively distributive. Dollar CAD here is not really not looking like it's really very, very, very well bid. In order for dollar to really assert its strength over the loonie, you'd have to break this 35 with conviction. And now what you're looking at is essentially a distributive top, suggesting that perhaps if we start moving back down to the 33s, this whole signal, which now has had a little bit of a counter trend move for about a week and a half, could be more real than we initially thought, and could really does push us all the way down to the 31 support level. Of all the COM dollars, the caddy is certainly the most range bound. I mean, I think if you sort of were to rank the strength of COM dollars at this point, Aussie looks the strongest, Kiwi the second strongest, caddy the third strongest. So if you're looking at cross trades, certainly Aussie against CAD, we'll take a look at the crosses, although this is not one of the crosses that I looked at this week, but certainly Aussie against CAD definitely looks like an interesting trade here. Although it was actually distributive here for the last couple of days, but this whole area at the 101, 102 level pretty much suggests that we could still have an upside move here. I mean, Aussie over CAD has been a strong uptrend since the beginning of the year. This is the correction move that we had last week. And given the way the Aussie is sort of setting up, if you have any kind of a bounce in the Aussie, you could have a potential here to move back up to the 103s. So it's interesting to consider that as a sort of a slow volatility alternative. But overall, basically just to sort of review the charts, if you look at the Aussie, it looks, even though it's had a corrective move to the downside here over the last 3 or 4 days, it looks like as long as it can hold support at the 76 level, any kind of an update would then put us back up towards a more positive bias. And over a long-term basis, as I said, as long as 75 holds, it looks to be a very, very positive bias trade. The Kiwi is more of a range-bound trade, but also, again, here, a hold above 70 puts us on a higher low and creates a much more positive structure going forward. And dollar CAD, of all of them, sort of the weakest, trading up to the upside here, but a break below 33 would suggest that caddy again also is resuming this downward impulse that it provided for us a couple of weeks ago. So COM dollars as usual, very low volatility, but a slight and quite interesting positive bias across the board on a technical basis, and certainly probably worth watching this week to see if there's any further development on that side. Wish you guys the best luck, the best trading. Boris, over and out.